Many people want to day trade the stock market, but they can't sit in front of their screen all day. Maybe they have a life, maybe they have a job. Well, in this video, I'm going to show you how to trade the opening half an hour and take the rest of the day away from your screen. All right, welcome to this episode of Day Trading Basics. In this video, I'm going to talk about how you can day trade if you only have half an hour a day. Now, it needs to be the opening half an hour, which works best for most people. The reality is most people have a job, they have a life, they don't want to sit in front of their trading screen all day, and this is a way to do that. You will need a smartphone and some little tools on that smartphone to do this, and I'll show you that as we go through this video. So as I said, many people don't have the time or desire to trade all day long. Most days, the best trading opportunities come in the first half an hour. You can enter your positions early and then monitor with your smartphone as you go about your day. So my approach is that I enter my positions in that opening half an hour. I will only enter trades if they trigger all of my rules, and I've built those into a computerized process. I'll show you a screen that does that in just a moment. I'm an algorithmic trader. I don't trade on hunches, on gut feel. I trade when specific rules are met, and I've computerized those rules entirely. You can actually watch my screen if you subscribe to the service that allows that. It's called the Active Live service. You can watch that screen, the same screen I'm watching, and what happens is during the day it will bring up the stocks that trigger my rules. Now, before the day starts, I have to determine whether it's going to be a buy day or a short day, and what will have to happen to prove me wrong. So let's say I say it's a buy day. For example, today was a buy day. I also say, well, if it goes below this level, then I'm wrong and I will exit my positions and it's now a short day. So we'll go through today in just a moment, but given that today was a buy day in the opening half an hour, I take any of the trades that are buys that trigger in the opening 30 minutes. And I do that with this screen right here. So this is TradeStation, and I use it to monitor the entire market, 7,000 stocks, and any stock that triggers my key indicator, which is called an action candle. I'll just show you that here. So there, you can hardly see it, but underneath there's a little pink dot. And so Taiwan Semiconductor triggered an action candle at 9:32 this morning, and it was a valid entry, and it ended up moving up quite nicely through the day. I'll put a link in the description to another video that I did on action candles because it's important to understand that if you want to learn about my approach to trading. And I'll try to put a link at the end of the video as well. All right, so that's how I monitor my trades and how I identify my trades. Once I'm in my trades, I will hold my positions until one of three things happen. Either a position gets stopped out for a loss because it didn't work, because the market trend reverses. So on a day like today, when it was a buy day, as long as the market's trending up, I'm happy. But if the market trend was broken, if that upward trend for the overall market was broken, then I would exit. Or the third reason I might exit is, let's say I have a stock that's a really big winner. I might exit it early if it breaks its upward trend, because sometimes stocks go up so fast that I don't really want to risk having that big profit turn into a smaller profit. And so when you get a big gain quickly, I'll protect those profits by exiting if there is a break of the upward trend. So what do I do after the opening half an hour? Well, I don't want to sit in front of my screen all the time. So if I don't, I will monitor my market chart and my holdings from my phone. And this allows me to check the chart of the market in individual stocks. So I will use the TradeStation app for my charting. There's other apps out there. You don't have to use TradeStation. Your broker probably has an application, a mobile app that will allow you to look at charts in real time. There's other, third-party software companies that are similar to TradeStation that have those apps as well. I will also follow my positions on my broker's mobile application. So I use Interactive Brokers, and I can monitor my positions from my phone. I can also exit positions from my phone. I'll show you that in just a moment. Now, I'm not trying to endorse TradeStation or Interactive Brokers. They have nothing to do with me. I don't get paid to endorse them. And I think there's things that are great about them, and I think that there's things that are not great about them. You can decide for yourself who you want to trade with. All right, so here is my iPhone's screen capture of the S&P 500 ETF, SPY, on a 13-minute interval. And this is what I would look at through the trading day to see if the market trend has been broken. So the market opened this morning down here. It gapped down into support. That's why I thought it was a buy open. It was likely to bounce, and it did that. And as long as the market was trending up, then I'm happy to stick with those trades that I bought at the open. And there was never a break of trend. We had a run up and a pullback that defined the trend line, would run up, pull back, and bounced off of it right at the end of the day there. So there was no signal to exit the positions because the trend was intact. And I do find that you're best to stick with your trades as long as the trades are working with the market trend. And I've done a lot of research on this. I have countless trades entered into a spreadsheet, which I'll show you in a moment, that proves the fact that you're better just to stick with trades as long as the trend of the market is working. Unless, you have a real big winner and you want to lock in the profit early. Now, the other thing that I want to monitor is, or have on my phone, is my broker's app so that I can exit. So this is another screen capture from my broker's mobile app, and it allows me to close all of my positions with one click. And so I can close individual stocks as well, but there's one screen where I can just say close everything 100%. I hit one button and I'm out, and it really takes like a second. And if the market trend was broken and I feel like I need to get out of everything right away, this is a great tool. So I can close positions on my broker's mobile app, one click. And as I said, if I want to exit an individual stock because it's run up really quick, I can do that as well. So my process is as follows. At the maybe 10 minutes before the market opens, I determine whether it's going to be a buy day or a short day. So today was a buy day. We'll go through today in a moment. I will enter my positions in that opening half an hour. And I don't usually enter too many after the opening half an hour. I find the best trades come in that opening half an hour, at least 80% of the days. And then if I plan on leaving my screen, I will set stops on individual positions so that if something goes really haywire and I'm not in front of my screen, I won't take a big loss on an individual position. I will also enter all of my positions into my mobile charting application. So again, I use TradeStation. I'll punch them all in there. And that way, when I'm out and about, I can pull out my phone and look at what individual stocks are doing, check their charts, that sort of thing. Really, I only spend about 10 seconds every 13 minutes, and you read that right, 10 seconds every 13 minutes to pull out my phone, open up my TradeStation application, and look at the 13-minute chart of the SPY. And if the trend isn't broken, then I turn off my phone and I continue with what I'm doing. If it is broken, then I'll just exit everything. It's that simple. Now let's go through today. So today was a buy day, and there was 31 valid trades in the opening 30 minutes. It trended up all day long, so there was no signal to exit early. So basically I exit at the close. And if we jump over to this screen, this is the reward for risk curve of those 31 positions. Now let me just jump you to this spreadsheet here. So this is where I every day I collect data. And again, because my strategies are entirely computerized, I can just pull out the data at the end of the day and put it into a spreadsheet. So here's the data for March 21st, the day I'm doing this video. These were the trades that were valid. There's a few metrics here that don't mean a lot to you, but they're meaningful in terms of whether these stocks met the rules of my strategy. And then the profit and loss for $1,000 of risk is there. So I can take all of these numbers and add them up every 2 minutes using another process I have in TradeStation and Excel to create this chart. So this chart shows how those 31 positions moved in terms of total profitability through the day. So these numbers here are for reward for risk. So if I risk $100 and I make $100, that's a reward for risk of 100. If I risk $100 and I'm making $500, that's reward for risk of 500. So this line adds up the reward for risk for all 31 positions through the day every 2 minutes. So for example, at 12:34 today, those positions added up to about 19 RR. All right. I use this reward for risk every day. I plot this graph so that I can see how the day progressed. And you can see that today was generally going up in reward for risk all day long. Perfect, that's what we want. All right. Now let's think about a day when we had a reversal. You know, today was a day when the market trended higher all day, but what happens on those days when maybe you're trending up and then you start to trend down later in the day? So I went through some of my recent trading days, and March 15th was a day when we had a trend reversal. Now, again, it was a day when it was buy at the open, and there were 49 valid trades on March 15th in the opening half an hour. But the market broke its upward trend at 1:24 Eastern time. So, you know, if I'm out, let's say I'm at Starbucks at 1:24, I open my phone because it's every 13 minutes, 10 seconds, I open up the phone, I look, oh, the trend has been broken, and therefore I'm going to exit every position. Well, now let's take a look at that chart. So this was March 15th. You can see the 15th there. You can see that it was a very similar day to today in that the market gapped down, but I called it a buy open because it was oversold, and it started to trend up through the day. Perfect, that's what I expected and hoped for. But the market trend was broken right there at 124. All right, so let's take a look at that reward for risk curve now to see what happened at 124. Well, you can see that the positions had a bit of a slow start. They weren't doing awesome. I mean, they were okay. There was plus 20 RR there, but they really started to take off when the market trended higher. Well, 124 is right there. And so if we draw our line upward, you can see that at 124, the total reward for risk was right around 70. That's excellent. Just off of the highs of 80, not significantly down, but that was the cue to exit everything. Why? Because the market trend was broken. Now look what happened to the total reward for risk after that happened. It started to move lower. And this just demonstrates the importance of watching that market chart with your day trades. You don't have to sit in front of the screen all day. If you have a mobile phone, you can pull it out, take a look. If the market trend is broken, and I like to use the 13-minute chart for my trend, then just exit everything. So sticking with the trend, although I could focus on individual stocks, I actually find it is more profitable to stick with all of my trades as long as the market trend is in my favor. Now, part of that is because I take a lot of trades. I'll take 20, 30, 40 trades in a day some days. If you're a trader who doesn't have the capital or maybe doesn't have the experience to take that many trades, and you're only taking 2 or 3 trades, then I do think it makes some sense to exit your individual stocks. But again, you can do that from your phone. Just take a look at your phone every 10, 15 minutes and see, is there an exit signal? If so, hit the exit button, you're out. You don't have to be glued to your computer all day long. Most days, I'll just hold until the close because most days the trend lasts through the day. On those days when it does not, great, I'll exit early. So I want to give you some more resources. I talked earlier about action candles, and I'm going to encourage you to watch my action candles video. I'll put a link in the description below so that you can watch that video. It really gives you more insight into my trading strategy, and you can learn more about that on the Stockscores.com website as well. You should also take a look at the upcoming events area of Stockscores.com. I do webinars all the time. Most of them are free. We do live events from time to time. They're also free. I'll just show you how to check those out. Just jump into the Stockscores.com website, go to Trader Training, upcoming events, and you will get the list of all of my webinars and that sort of thing. So you can see some webinars. You can see whether it's free. Some of them are paid for our members and that sort of thing. You'll see an indication of that with the blue and orange boxes, but as you can see, most are free. I've got some live events coming up as well. I'd love to hear your questions or comments about this topic, so leave those below, and feedback is always welcome. Subscribe to the channel, like the video if you found it useful. I'm always trying to give you some content that I think is educational, hopefully helps your own trading, and I'm encouraged to do more videos if you subscribe to the channel and hit the like button. Hope that you've enjoyed this one. And as always, trade well.